Yo, crypto fam. We got some wild news coming out of the digital Wild West. Buckle up because things just got real. Bybit, a major crypto exchange, just got hit with the biggest hack in crypto history. We're talking about a whopping $1.5 billion, folks. Poof! Gone. Just like that. Here's the deal. Hackers targeted Bybit's ETH cold wallet, which is like the Fort Knox of cryptocurrency. It's supposed to be super secure, offline storage. But somehow these digital bandits managed to crack the code and transfer all the ETH in the wallet to an unknown address. Now Bybit's CEO Ben Zhou is trying to do damage control. He's assuring users that their funds are safe and sound. He's also saying that withdrawals are still open for business. But let's be real, folks. Actions speak louder than words. Before the hack, Bybit was sitting on a pretty pile of digital gold, about $16.2 billion in assets. So yeah, $1.5 billion is a significant chunk of change, even for a crypto giant. Bybit is now scrambling to cover the losses and reassure investors. They're talking about using something called bridge lending, which basically means they're borrowing against their own tokens. But hold on, because just when you thought things couldn't get any crazier, the SEC decides to drop a bombshell. Remember that whole legal battle they've been waging against Coinbase, the biggest crypto exchange in the US? Well, guess what? The SEC blinked. They were all set to take Coinbase to court, claiming they were operating like a rogue state, without proper registration as an exchange, brokerage, and clearing agency. But now, the case has been dismissed. Naturally, Coinbase is stoked. Their shares shot up almost 6% in pre-market trading, and the entire crypto market got a boost, with Bitcoin inching closer to that magical $100,000 mark. For a minute there, it seemed like the good guys were winning. But this is crypto, folks, where every silver lining has a cloud. Just as the crypto world was celebrating Coinbase's victory, the news of the Bybit hack hit the streets. And let me tell you, it hit hard. Remember that Bitcoin surge we were talking about? Yeah, about that. Bitcoin took a nosedive, plummeting almost 5% from its daily high. Ethereum, the second largest cryptocurrency, fared even worse, dropping over 8%. And don't even get me started on the smaller altcoins and meme coins. Those things tanked harder than a lead balloon. Even Coinbase, the supposed victor in all of this, couldn't escape the carnage. Their shares did a complete 180, closing down over 8% for the day. Talk about a roller coaster ride. So, what's the moral of the story? Well, for starters, the crypto market is volatile, like really volatile. One minute you're riding high, the next you're staring into the abyss. But there's a bigger issue at play here, and that's the whole debate around regulation. Some folks like our friends at Coinbase argue that the crypto industry needs more regulatory clarity. They say that the SEC is more interested in playing gotcha than in fostering innovation. On the other hand, you have experts warning about the dangers of deregulation. They point to the Bybit hack as a prime example of what can go wrong when you have billions of dollars flowing through a system with little to no oversight. So, where do we go from here? It's a tough question. One thing's for sure, the crypto Wild West is still a very, very wild place.